Good morning. This is Japanese Economic Review Channel. Today, we review a historic milestone for the Japanese equity market recorded on June 22, 2026. In the absence of overnight cues from the U.S. market due to the Juneteenth holiday, the Tokyo Stock Exchange demonstrated remarkable self-sustaining strength. Driven by robust domestic appetite and strategic corporate moves, both the Nikkei 225 and TOPIX reached new heights. Let's dive into the data behind this extraordinary session. The market delivered a stunning performance yesterday. The Nikkei 225 surged by over 1,100 points, closing at 72,353, marking an 8-day winning streak. Simultaneously, the TOPIX rose to 4,095 points. This rally wasn't just a marginal gain, it was a definitive breakout to record-breaking territory on a closing basis. The sentiment remains firmly bullish, as investors price in structural growth and favorable currency conditions. Market liquidity reached massive proportions, with trading value hitting 9.82 trillion yen on the prime market. While the indices soared, the market breadth shows a more nuanced picture. 792 stocks advanced while 727 declined. This indicates that the rally was heavily concentrated in index heavyweights. Additionally, Nikkei futures are trading even higher at 72,860, suggesting that the momentum is far from over as we head into the next session. Looking at the intraday chart, we saw a dramatic surge shortly after the afternoon open. At 12:35 p.m., the Nikkei hit an intraday record high of 72,831, up 1,581 points from the previous close. Although we saw some natural profit-taking toward the end of the day as it hit upper resistance levels, the fact that the market absorbed this selling pressure and closed near the highs highlights the incredible resilience of current buyer demand. Sector-wise, 22 out of 33 indices rose. Non-ferrous metals and semiconductors were the primary winners, with Tokyo Electron and Murata leading the charge. Financials also remained strong as interest rate expectations shifted. Conversely, the real estate sector lagged, likely due to concerns over rising borrowing costs. Notably, we see companies taking bold steps, such as GMO securing a defense-related robotics contract and Honda launching a limited edition of the Prelude. The positive sentiment spilled over into the growth market, which moved in tandem with the Nikkei rally. We are seeing a capital rotation into AI-related tech stocks. Leaders like PowerX and Astroscale saw significant gains, while TerraDrone also trended upward. However, the market is becoming more discerning. Stocks like DataSection and Timee faced consolidation, signaling that investors are now focusing on actual execution rather than just hype. Finally, macro factors continue to provide a powerful tailwind. The yen's persistent depreciation, trading in the 161.70 range against the dollar, remains a massive boost for export heavyweights. With the U.S. market closed, Japan became the focal point for global capital. As companies like Shimamura and Unext announce new digital and niche market strategies, the combination of a weak currency and corporate transformation makes the Japanese market a compelling story for the second half of 2026. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.